Thank you so much for coming here, and thank you so much. I appreciate your dedication for this learning. And before I appreciate you all, let me appreciate Dayaji, Vijendraji, Abhishekji for having such a wonderful and delightful session for today. This is one of the best and most delightful event I could see in last 3-4 years. Of course, there were wonderful session, but today's the number of audience involved in this session is very delightful. So before I start, I would like to know how many of you hold COP here? Just show of hands. Okay, majority. And how many of you doing bank audit? I mean, it seems that everyone is doing bank audit. So before I start today's session, let me give you one the core concept of today's session, and then we'll gradually and progressively hop on the main topic of today's, how we are going to land up upon our procedures. I remember 10 years back when I joined a reputed consulting firm. I was assigned under a senior manager who was quite enthusiastic, quite aggressive when it comes to audit. And I remember I joined, he was given a new assignment, a new client. Just mid-size, the client looks very easy to do, and partner said we have to turn around this client in 2 weeks time. It was difficult, but considering the size and the balance sheet size, we believe that it could be done. And I was very new. I was not aware. I thought, okay, chalta hai, ho jayega, considering he has a legacy vintage in the firm and probably he could do it. Then what happened, even the manager who is supposedly to impress the seniors, what he did is, without going through, the documentation, of course the previous year audit report, everything would have gone passed by, but he directly hop on the transaction testing. He started doing the test of control, substantive, a lot of fancy rosy things like PSP, OSP, assertions, blah, 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 judgmental testing, random samplings and all. 1 week pass away and we are about to give our deliverables, which is audit report, in a 1 week's time, and we realize something is missing. No one could analyze, but after 1 week we realized that there was a change in accounting policy of a revenue recognition. And that was a major setback for all of us. We have to again go back a week prior and relook at what went wrong. What are the emerging changes? What are the the policy impacted the financial statement, which we overlooked. We started looking at the asset size. We are looking at the other aspect of the balance sheet, but we knowingly, unknowingly not looked at the revenue recognition part. And that was a major setback. And that is today's topic. That's audit planning. Before we hop on any audit, we have to understand what are the major changes, what are the emerging technology, what are the emerging risks. We have to identify them, we have to work upon them, and then only we have to start. And that is the exact incident even today before we start off, or whenever I request my team member to start any audit procedure, you look at the audit plan, have the proper audit planning program, have the planning meeting. If you do without that, then it's a waste of time. And you all know this, the very famous movie, Harshad Mehta Scam. Yeah, just everyone would have seen that movie? Sure, yes. So what was it? It's a classic example. Nobody had looked at the emerging risks which arose at that point in time. Back then in 1990, if you remember or recall, the bank used to see the physical receipt, the bank receipt, and instead of looking at the securities, in today's time we call it as the BainPOS statement or DMAT statement, CDSL, NSDL statement. That point in time, people used to look, or the auditor used to look and the physical receipt, and that led to the opportunity or the vulnerability to forge the document, and that the Harshad Mehta took the advantage of it and he started forging the receipt. And people have started, accepting those receipts at the face value, and he started, inflating the stock prices. Even the auditor couldn't identify it. Later upon, the forensic and the journalist who came upfront and identify why this scam has happened, they identify. The auditor, the management, the banks, everyone relied on the bank receipt. They accept it at a face value. So you have to be very analytical. You have to read through what are the most modern Western risk which has come across. If you look at Jilani Ghosh committee recommendation, I'm just giving you the analogy how you can change your focus from what given in the piece of paper or your the circular and the master direction. You have to put focus on the reality, what is happening. So if you look at the Ghosh-Jilani committee, it says that you have to see the one of the the requirement is you have to see whether the customer walk into may I help desk or he directly walks up to the cash counter. Another thing is whenever you issue a checkbook, whether the requisition form is signed or not. That is not possible in today's time. Nobody goes to bank. When they have a tab or mobile in hand, they just place or transfer the fund, or they just place a checkbook request. So here the point I am trying to put across here is you have to understand what are the emerging risks, what are the how people use different technique to manipulate the whole process, and that should be part of your audit planning rather than following up on the old checklist which we have been doing since all last 5-6 years. If time permits, we'll walk you through the audit planning checklist. If not, then what I'll do is I'll share those today's the considering today's time, we have drafted a checklist, and which will be a more extensive. Some of the point may not be applicable for your branch or maybe for your particular bank, because certain banks are retail banks, certain banks are the asset banks, certain banks are classified as a liability branches. Certain banks are, the mega branch, certain centers are called as a CPC. So you have to customize, but I'll give you the extensive checklist. And consider today's program, of course, this is a learning platform, but consider this as a, takeaway so that you can train, guide your team members who will be doing the actual legwork. Even today we are sitting on 16th of March and we have enough time to plan our things. So take this as a training, or how you could help your team member to perform this. So before I start, I would like to understand why we do this audit. Do this audit to see the risk involved in the branch, or what are the the health, the financial health of the branch, and according to we have to draft, we have to navigate our process, we have to help, we have to assign the resources. If the branch is a mega branch, accordingly we have to put or allocate the resources. According to we have to mix of the staff who could do the IT control testing, who could do the loan, who could do it should not be the standard. We have to see the branch sizes, and accordingly we have to assign the resources. Some of the regulatory frameworks we have to customize, and of course we have the fraternity who are coming and walking you through with the Banking Regulation Act, RBI circular, and the guidelines, ICA auditing standard, and the Companies Act, which is relevant to the bank audit. So these are the three phases which are predominantly involved into audit, which involves the planning, execution, reporting, and the certification. Today we are going to cover the audit planning, and the execution and the processes will be driven by the other fraternity members in the following up sessions. So this is the highlights of the planning phase, the scope, risk areas, and the studying the past audit report. In the execution stage, we actually implement what we have drafted or planned or documented in the planning phase. And the third one is the reporting phase, where we draft our audit report, make the MOCs, and the certification works. So as we discussed, before we start or before we deploy our team on a particular audit, we have to understand the bank, which is, the segment the bank is involved into. Now, not necessarily all banks does the same business. Uh, if you could see the IDBI bank, you will not see a retail customer having a bank account with the IDBI bank because they are more into the wholesale banking. Likewise, the CDB. Likewise, Union Bank or Central Bank of India or State Bank of India. So each bank have their own USP, their own the asset size, their own the way of borrowing the money, their own way of lending the money to the customer. And the customer is the subject matter. As the customer varies from the wholesale banking to mid corporate to small corporate to retail customer, we have to draft, we have to ensure our audit resonate with the size and the type of branch we are doing. So we have to understand the economic and the banking industry. Banking terminology. This is especially for the new team members or the interns we are deploying. So what is a DPDs, SMS 012, what is doubtful asset, substantive asset, what are the different terminologies which has, developed over a period of time. We have to help our team members in terms of banking terminology. We have to understand various RBI circular guidelines, notification, which has come time to time. So now, if you could, nowadays, so it's very easy to access this database. You could see it on a Google and various database, and the PPTs are available on RBI guidelines. But it's very important to understand how to interpret those guidelines and the circulars. Someone may interpret a particular, for example, someone may interpret this particular color as a off-white. Someone could interpret this color as the light yellow color. So the law and the act is defined in a way that the person who is looking at it, or as per his experience, he may interpret it. But that is not the case. The law is standardized. And we have to understand the single meaning out of it. Yes, your circumstances or your situation may lead to, have the different interpretation, but all act and the regulation has the same standard and the same meaning. So you have to abreast yourself with the RBI circular guidelines and the notification. ICA guidelines, again, these are the guidelines, has to be followed. These are not mandatory to be followed, but these are the guidelines. It's a directional. Accounting policies of bank, auditing and accounting standard, banking circulars and the manual. So what does bank do is, if bank is into wholesale banking or maybe retail banking, for example, IDBI, which is into wholesale banking. So they have their own manuals of assessing the customers. They have their own, the catalog or the process manual. Before they identify or before they disburse, before they log in the customer, they have the grid, the algorithm. The customer should have XYZ net worth. The customer should have the business experience of so many number of years. The customer should have, the X size of customers in their pool. So you have to go through that before you actually start the audit. Various softwares like CBC, Finacle, Fin1, FlexCube. Nowadays, TCS Bank is another software which is, emerging. Knowledge of CAT and audit, IT auditing tools, reporting of ICFR. These are the certain aspects you have to know before you start the audit. So before we, actually touch base upon the planning, may I know how many of you actually, of course, 100% all of you must be documenting the audit planning chart or audit planning program as a part of their audit, because you must be subject to peer review and you have to document it and you have to demonstrate the peer reviewer that this is a plan, this is a document we have. But always remember, before you start, you classify your audit based upon the balance sheet size. Now there are various types of, the testing we have. Um, if you could just help me out, what are the different types of testing we could do? Anyone? I'll just give you like inspection or citing. So what are the other, if someone could, I want more participation. If you could participate, it will be, more meaningful. This session could be. So I'll start with the simple questions. What is a CRR requirement or SLR requirement? CRR requirement for bank? Any show of hands? 4%, yeah. And SLR is 18%, yeah. Thank you so much. Give a big round of applause. He's the one who participated. Thank you so much. So likewise, we have to understand the terminologies. What are the various testing we have? How we can test or select the samples basis on the manuals given. So the testing like test of details, test of controls, how to identify, how to select the sample for test of controls. What are the random sampling called? What are the judgmental sampling called? You have to select, you have to document those, that out of this particular loan book or AUM of say 100 crore, I will select a 25 samples as a test of control. On those test of controls, you have to identify what could go wrong. What could go wrong in the sense, if there are any risk, any lapses in the processes, what could go wrong? For example, there are no maker checker. If there are no maker checker, what is the chances of recording incorrect information? Very high. So recording of incorrect information is a what could go wrong. That I could enter incorrect information and it will be disbursed to the customer. So for that what could go wrong, you have to put the controls. Okay, for this incorrect information keyed in the system, I will have the control, which is a maker checker. Or sometimes we call it as a 2-eye controls or 3-eye checking. Against each control, you have to assign the assertion. Now you may say, some of you may be accustomed to this terminology, but again you would have 100% you would have come across. If the item is the balance sheet item, there are various assertions associated with this. And if it is a P&L item, there are various other assertions. For example, for balance sheet, the assertion like existence, completeness, valuations, these are the certain assertions which are associated with the balance sheet item. And for P&L item, there are other set of assertions. Assertions such as accuracy, occurrence, the classification, again the completeness. Completeness is an assertion which is common among balance sheet item and the P&L item. But these are certain assertions, these are certain controls you have to document, and based on that you have to plan your audit. And the audit will, this planning will lead to selection of, sample in a proper direction you thought it would be. So we discuss what are the, how you can test your sample, what are the different method of, such as test of control, substantive, primary substantive testing, secondary substantive testing, what are the different assertion, and to cover up those assertion, what are the control you will assign. Then comes to materiality. Materiality, again, it's very important part of our audit planning, because if you don't have materiality, you will end up having a sample which is not relevant, or maybe I'm not saying it's not relevant, but may not have a more weightage. For example, if you are selecting a sample, even this sample is may not have that sufficient impact on the financial statement, you may end up losing your crucial time. So you have to select a sample. For example, if the balance sheet size, say for example ICICI Bank, this balance sheet size is 6 lakhs crore. I will choose a sample for my substantive testing exceeding a certain threshold. The loan which are exceeding 15 crore, 50 crore, loan particularly, driving into a particular segment. For example, nowadays, which are the high risk segments, if I may, just show of hands, anyone could? High risk area, sir? Derivative valuation, wonderful. Any other segment? NBFC. Yeah, NBFC again, it's a quasi bank, but yeah, NBFC is one.
Bank giving loan to NBFC.
Yes,
Be on high risk area.
very, very good. Any other areas you could see? Wonderful, real estate. Yeah. Any other one more? Now you could see in the last few 6 months, 8 months in the news. Cooperative bank, very good. See, if you see real estate, NBFCs, these are the certain areas where you see the vulnerabilities. They are very prone to the change in the economies. Another area of the hospital, education institute, you could see a lot of delinquencies because the security. You will see when you have the loan book in your on your table. You will see the education institute has given me a sufficient security cover. For example, recently I was doing a South Indian educational institute which has a top line of 137 crore. And they have a roughly borrowing of 60-70 crore and they have the security cover of 100 CR. But that account is very prone to the risk. Now you may say, sir, there is a top line of 137 crore, cover of 100 crore, but there is a delinquency. The institute is not paying the debt on time. And this is where we recommended a bank based on the industry analysis to make a provision for those accounts. Now you would say why the provision is required if the situation is when there are supporting situation is prevailing. So if you see the education institute gives their college or the institute where they depart or impart the trainings, you cannot actually liquidate, you cannot auction because it's anti-constitutional. You cannot take the student out of the college and the university and the school. So in a nutshell, you cannot actually recover your debt by selling the security. So this is the time you have to actually take the action. You cannot put the stay on the colleges, or you cannot, likewise hospital, when they give a security cover, you cannot actually take the patient out from the hospital. If any hospital, education institute, and likewise you can connect this with the other industry which are constitutional. Even you go and recover, the hospital trustee or the school trustee put a stay on your recovery processes. So this is a very high risk, another emerging risk areas where we have to put a focus. If somebody has given their hospital or the education institute as a primary charge, then you have to be very, very careful when there are any delinquencies or any chances of delays in the payment. Again, a branch audit again is subject to stringent timelines. So when we start the audit, generally we start audit 4th, 5th of the April, and they expect us to deliver by 7th or 8th of the April. If you can't deliver, you have not received any information, you have a right to speak or right to write a letter to Central Statutory Auditor that within this timeline, considering the efforts and the time we are putting and the kind of feedback and the kind of documentation we are receiving, if we are unable to deliver what we supposed to or expected to deliver, you have to write down. Again, there are various certificates which we give to regional department, then it goes to zonal, again it goes to a head office. Again, the time span of this could go to 25th of April, but sometimes branch manager or official, they insist us to deliver 7-8 days. If it is practical not possible, you have to raise your hand and you have to speak up. But that doesn't mean you have to have a quarrel or the dispute with the branch manager. But given an opportunity, you should always raise up or at least put a caveat that because of this time constraint, I am unable to look at the particular area. For example, I was discussing the Ghosh Jilana committee. You couldn't verify whether the customer has come to a may I know your counter or or directly cash counter. You couldn't see. You have to just put I am not verified, I am not cited the controls around it, and hence I am not able to give my opinion. And further it leads to consequently I cannot comment upon the associate risk on it. You cover yourself. If you can't see anything, you can't audit anything, you have to give your, whether it's yes or no. There is no harsh punishment. Yeah, of course, if they are expecting you to do a control testing, substantive testing, they expect you to do KYC, AML testing, and you are not done, and there you cannot put that I have not looked at it and hence I cannot comment on it, or I cannot, comment on the associated risk and the impact. That you are supposed to look at it. However, if you have not received information, you put that, okay, despite having a follow-up with the management, I couldn't get the information, hence I am unable to audit for that particular area. We already discussed materiality levels, assessing the risk. Again, we already discussed what are the analytical and substantive procedure. Of course, we have another session where we'll actually deep dive what are the various audit procedure we can have for advances, deposit. But today's session is all about the planning, where you stand and how you can, lead your team and the entire audit in a direction which you thought it would be. So there are the certain areas we can, before we start. Now we are sitting on the 16th of March. The audit is yet to start, book are yet to close, but these are the certain things we can do today so that we can save few hours or few days today itself. What are those areas? Appointment letter, NOC from previous auditor, issue of engagement letter, inform branch and share IRL. So this is very interesting part, and this is very important. As me as an auditor, I believe if your IRL is strong, you get a quality feedback from the management or quality documentation. What is IRL? Information request list. Everyone knows that, okay, this is the requirement list. So if you customize your requirement based on the information available with you, you get the correct documentation. Again, you have to give some time to the management. Sometimes I have come across a situation where audit team send some other client's requirement list, and then the management or the branch fire back. Okay, these are the areas are not applicable to us. Have you come across? Just raise of hand. We send some requirement list and the client says, okay, this is not applicable to me. Why are you sending and wasting our time, putting even a comment that these are not applicable. I'm sure 100% you would have come across, not on the bank, but some other clients. So same thing, we can draft our requirement list, have the initial meeting with the branch manager, understand what is our scope, what are the, the transaction they have, volume of transactions, value of transaction they have. Based on that, customize your requirement list. Inform the branch that when are you going to start the audit. Set up a time limit that, okay, I will start from the 2nd of March. I will do my cash count on the 31st or 1st. And I will start my audit process by 2nd. And I want, these are the documents I want. You may have to visit CPC or Central Hub, because the documents for the loan file may not necessarily available at the branch. They may request you to visit. Again, you have to park a day or two to visit CPC or the nearest bank, or the the place, the centralized place where they have the original documents. Again, audit program, we already discussed what are the features, what are the the items consisting of audit program. And the last part is LFAR. Don't think the LFAR will start at the end. LFAR is start when you start the audit. Don't consider LFAR as a non-financial item. Consider this as a combination of financial as well as non-financial items. Now there are certain instances where the financial impact is there. You may put them in your MOC or maybe main audit report, but may not necessarily put them in a LFR. But there are certain items which there is no functionality to report them in our audit report or in the MOC. Where would you park them, or where would you report them? So LFAR is the right place to report those items. So don't wait LFAR or any certification, which will, as we move ahead, we'll discuss this. Don't start towards the end, start along with this. Have your checklist ready for LFAR. Start putting, just don't say yes or no. Because yes or no not applicable is not going to save you when you have a peer review or regulatory review. Put some explanation. Okay, these are the certain samples I have cited. These are the incidents. These are the instances where I have cited the loan documentation. These are my observation. While doing the cash count, you're not supposed to cash count the entire the cash. You have to select the few bundles. You have to see the currency notes. You have to see the bait note. You have to see the other challans and the documents which they have. You have to report them. You have to write them. Out of so much of cash, how much of cash you have cited or counted. You have to document them. Again, as we have already discussed, depend upon the size of the bank and the operation of the bank, you have to involve the staff. Sometimes it's my own experience that when we don't put the resources as we required, then we get the pushback from the branch that your team is not accustomed, they don't know, and we are not, this is not a school to teach them. We want people with the proper resources and the knowledge. This is what we are expecting from you. So have a proper combination of the resources. Now it's very difficult to get the resources during March and April, but yeah, you have to plan it well before. Time management. Of course, the audit of a decent sizable branch could be done in 2 weeks to 3 weeks time, provided you follow the modus operandi, you follow the entire process as you thought it would be. Observation to be discussed with the team, then with the branch manager. So before when you come to the, again, this is a part of planning. So planning, you will do the audit, you will have the observation, and then maybe you will hop on the report. But again, it should be plan of the audit that when you have any observation, a major observation, you don't have to wait until the end of the audit. You have to first discuss, review the entire observation, the evidences the team has gathered with the team members. And then you have to take it to the management. What could be a financial impact? What is the management response? Sometimes they are not able to address or solve this issue. Then you have to put them in your audit committee presentation or MOC or LFR. These are our observation. These are certain management response we have received. Now again, this is a crucial, and I'm sure everyone must have gone through this. The other documents to be checked: the previous year audit report, internal audit report, concurrent audit report, credit audit, stock audit, or any other audit report applicable to the branch. You have to get them. Sometimes you may see very crucial item or crucial transaction which could change your standard way of looking at the audit. For example, you may come across a particular, for example, you could see in their a concurrent audit a particular segment of branch are doing differently as compared to the other branches. So that could be your focus area. That could be your area where you should have more samples from. So look at those, go through those reports, make an executive summary. If the internal audit report or the concurrent audit report goes into 100, 200 pages, make a 1-page or 2-page executive summary. See, understand. And as per my experience, all internal and concurrent audit report has an executive summary, which consists of 1 or 2 pages. Make further, the concise executive summary of that and document it in your on record as a part of your audit documentation. Again, RBI inspection report, I'm not sure whether everyone is privileged or have the liberty to access RBI inspection report. But more importantly, rather than putting a pressing on the RBI inspection report, you look at what is management response they have submitted against those RBI inspection report. Sometimes auditor have a skip level meeting with RBI. Again, those are if you are a central statutory auditor, you have a liberty or privilege to have a skip level where the management may not be a part of that discussion, where you get to know what is RBI way of looking at the particular branch, what are the way they look at the branch, the operation, what are the area where they believe there is a susceptibility of the fraud or material misstatement in the financial statement. So those are another areas where you could get a direction. You have to go ahead, where you can pick up the sample. For example, for example, the concurrent auditor or the internal auditor has already commented on the particular stress in a particular segment or sector, or they have identified lapses in particular process, and if you missed or overlooked at you may be liable, not necessarily liable, but it will be your negligence on a part of audit, that you have not looked at the internal audit report. There are the certain deliverables. Again, there are standard templates for audit report, and the MOC is customized based on your observation and the requirement. Tax audit report, LFAR, you keep your tax audit checklist, LFAR checklist. Certain audit team, they have the audit checklist, audit report checklist, and the MOC. They see what are the observation of previous quarter or previous year end, what are the MOCs they have for the previous, against that how the management has addressed those issues during the year, and what is the current status, whether those has been resolved or those are still open. So again, you can keep those ready beforehand, before you start the audit, and maybe probably that would be a good starting point for you to start your audit. Sit with the management. These are some of the opening points we have. These are the certain points or observation which we have come across in our internal audit report, concurrent audit report, RBI inspection report, previous year, the stock audit or audit report or MOC. That is a good starting point. Start with that. It's give you, the ready platter to start with, rather than you start the audit, try to figure out what could be the area I should more focus on. These are the certain points where you can actually start the work. Again, the certificates, don't start the certification work after you finish the audit. Start this work with your audit process, because by the time you reach towards the end, you will be struggling to draft a report, MOC, management representation letter, and there are the fair possibility that you may mess up or you will get stressed up, sitting late nights, logging late nights and finishing the work. Start this beforehand. And as we rightly mentioned, time management is very crucial. Time management is very crucial when it comes to the audit, because time is the essence in our audit. We have to deliver this in a week or 2 time. So start the work along with your audit process. I would suggest if you could start the work in the last week of March, that could be a great saver for you. LFAR, or focus on the advances, IRAC norms, deposits area, balance sheet, P&L review, certificates, verification of documentation. You can take the February as a cutoff, or February financial, or the provisional TB of March, and you can actually do the substantive audit testing. Substantive in a way that it's an analytical testing. You could see if the advances are increasing and the interest income is going down, or deposit is increasing and interest expenses going down. So what are the reasons? What is that happening? Is it because of the delinquency, that interest income is reversing? Or so these are certain points you can actually document and start looking at it. Start, when you look at the whole balance sheet and look at it into analytical way, you will get to know where you have to focus upon. Why the interest expense is going down, where the deposits are going up, whether there is a non-renewal of FDs, or FDs are liquidated beforehand. So these are the reasons you have to understand. Understand in your appointment letter or engagement letter which all certificates you have to deliver. Sometimes there are certain special certificate as required by the statutory auditor, central statutory auditor. You have to work on them. Again, these are the certain stages you have to be very careful in your audit. These are the certain deliverables, or you have to manage this in your span of 2 to 3 weeks before you finish. LFAR, review of advances, IRAC norm, deposit, balance sheet, P&L review, certificates, verification of documents from CPC. As I rightly mentioned, that you have to keep park a day to visit CPC where you could see the all original documents. MOC and audit report. You have to have the time for MOC and the MRL management. This is again crucial documents, because this will safeguard you when it comes to regulatory review or the peer review. If you have not come across, you have not seen any document, or management has not given you opportunity to look into, or given you time, sufficient time to perform a particular audit, you have to put them in the MRL, management representation letter, that the information is being provided by the management and the information is correct. In case you believe that the management has not provided certain information, or they are saying we will provide you, or maybe certain times or instances they give you information on the nth day, you can record them that the management has provided and there was not sufficient time for us, and hence we may not be able to comment upon or opine upon a particular area, and we may not able to see the regulatory risk and the consequential impact on the financial statement. You can document them in the management representation letter. Again, UDIN, on the last day on the bank server, or whichever software you work upon, you have to generate a UDIN. You have to sign off over there. So you have to plan a day for that, have a time for them. Final discussion, DSC, digital signature. You have to ensure your DSC is active. And the audit documentation. Now this is very crucial. Sometimes we finish the audit and we immediately hop on the other audit without documenting the entire audit. So you have to maintain this documentation. So you have to keep certain times, maybe 3 days, 4 days, to have all the documents, evidences, your observation on the record. If time permits, we'll deep dive into each of these areas, or else we'll deep dive on certain crucial areas which we'll come across. May I know, just show of hand, how many of you are new to bank audits? Just doing bank audit last 2-3 years. Few of them very new. So you have to be very careful. The slides, I'll put it on a group and I'll give you the supporting documents and the checklist, which could serve you a ready platter. So you need not have to read through all 200 pages of accounting standard, auditing standard, or RBI circular. We have drafted the entire the circular. It's boiled down to a few the pointers, checklist. Just go through that. It will give you, it may not give you 100%, but it will give you a sufficient coverage of the entire audit program. And actually you can use this checklist to give your team members, interns, semi-qualified, the one who's doing the actual legwork. Ask them to go through those checklists, the requirement list, the guidelines, the summary of guidelines. It may not be the entire IRAC norms, but whichever are relevant for your audit may be there, may be captured there. So go through that, get your team member to accustomed with this kind of, and then only I recommend to proceed ahead. Again, we already discussed about the banking environment, ICA guidelines, RBI circular. The another key area is a high risk area. If you miss out identifying the high risk area, your audit lead to something else. And then you will realize when when you actually realize that, okay, these are the certain areas I should have focused upon, but I looked at something else. So identify high risk areas beforehand, and it is not that easy to identify. Again, we call it as a, this is very important, focus on high risk area. But the question remains is how to identify. I am not a mind reader. I cannot understand what branch manager is thinking or what branch manager believes could be a high risk area. So what should I do? How to identify high risk area? I'll make it simple for you. I know we already discussed. Find the concurrent audit, see the executive summary, have the discussion with the management or the branch manager or the staff involved. Sometimes, by their, because see, if you look at your own experience, you are all CA graduates, must have done the hard studying. Sometimes people, the way they speak, the way they, their hand movement, the way their facial expression they have, you can actually gauge whether there is something behind their words or not. Sometimes, I'm not saying necessarily you are not a face reader and all, but sometimes the way they act, sometimes they refrain providing you information, sometimes the way they, have a, what you call, a discussion, sometimes they tell you something and you see something else on the record, you can easily gauge that these are the area I should dip down. Sometimes branch officer or manager I have come across that they deliberately do certain action or reaction that you believe there is something fishy in that area, and we unnecessarily put more efforts and we end up having nothing. So you have to be very careful how to identify those high risk area based on the process understanding you do, the walkthrough you do. Look at the organization, the branch chart, the resources or the staff they have. Look at the effectiveness of testing. Look at the design testing, how the control has been designed, whether those are effective or not. And based on that, you identify the high risk area. Understand previous year audit report, internal control system. Just this explanation of what we discussed. Again, these are the another area nowadays RBI is focusing more upon is the KYC AML compliances. Sometimes the auditor has to give a certificate for KYC AML, but you have to be very careful. It's not only the customer which the bank is onboarding, but again, it is the KYC of the person whom you are giving the loan. For example, I have taken the home loan or the borrower has taken the home loan. Supposedly, if you disburse that loan into their CC account, then it's a trouble. Then you may never know how the promoter or the borrower will use whether he will use in the share market or he will use it for working capital or he will use it for something else. So you have to be very careful. If the term loan is disbursed, whether it's a disbursed into CC account or it goes to the party. For example, a borrower is buying a machinery, so it should go to a borrower's account. Sometimes the borrower are very smart. Sometimes borrower are very smart. What they do is they give you the agreement of say Reliance. You see the names, okay, he is working with a Reliance, now we can rely on this Reliance. But when the money actually disburses, it goes to third party. It's not even close to Reliance, not even a group company of Reliance, but it goes to somebody else. So it is very important, and RBI also mandate that you have those supporting documents who you are giving the money. Whether it's I don't know whether you have a functionality to access the red flag accounts or the terrorist accounts or the names which are assigned to a terrorist list. Bank has that functionality, and we believe that bank would have gone through those red flags accounts. But you have to be very sure if the agreement is in Reliance name. If you are transferring money to that account, you have to ensure that the bank account name and the KYC document of that particular corporate matches with the agreement. So again, this is another area where the susceptibility of fraud and are pretty high. Again, interest income recognition, I'll not deep dive considering the time constraint. the other fraternity member will walk you through the income recognition criteria. But again, I will just touch base upon, you have to, as a part of your audit planning, you have to ensure that you cover up all the segment of your loan book. You cover up your sample from the each segment, the standard, SMA 0, 1, 2, 3. Then there is no 3, but SMA 1, 2. Then your substandard, again D1, D2, D3. D3 is 100%, you know, the covered. You can see the fraud cases. Now somebody says, okay, why fraud cases to be looked at where the 100% would have been provided? You believe that 100% would have been provided, but there is a, you know, the RBI circular where it says that you can actually defer the provisioning over a period of 4 quarters if the bank has identified and reported to RBI. You have to actually see through the examination and the inspection report of a particular branch or bank whether they have identified the external party or the auditor has identified. Sometimes the external party identify and they take the benefit of doubt that they themselves identify and report it to bank, and they defer the provisioning over a period of 4 quarters. So these are the certain area, you know, where you have to choose the sample form. We discussed that the high risk area could be a loan and advances, non-performing asset, KYC, AML compliances, income recognitions. You have to select a sample from NPA cases as well, because sometimes you could see in the previous month or the previous year the case was D1, and still the case even today this is lying in the D1. So when you select the sample, see the historical trend of that customer or that borrower, why that customer is not moving to the next level, D2 or D3 or loss assets. You have to ensure that. Any questions so far? Thank you. Again, another area which is a plan of audit. Now you may misconstrue this with the audit process, but another area is identifying the exception report. Sometimes what we do is, now this is very important. Now before we wrap up this session, this is certain important points you have to keep in mind. So sometimes we call for ledgers. Now this today's modern Western, the auditing mechanism, instead of calling for SOA or ledger, we should call for exception report. The exception, bank has a functionality, all the areas they have the functionality to pull out the exception report. You have to be very careful. What are those various, because we know, the expired DP or stock statement more than 3 months. These are the standard exception report we have, but they have various other exception report, the cash count mismatch or any fraud or BG invoke, LC devolve. So these are the bias credit default, SBLCs. These are the certain exception report. You get all the exception report. You may not necessarily select the sample from, but at least get those exception report and start analyzing those exception report rather than identifying transaction from the ledger. If you do the ledger testing, probably you may end up, it may boil down to another, or you may not get the kind of observation you are looking out for, but 100% you will see those results from the exception report. Get the list of exception report. Branch is oftenly generating and they are monitoring it. So get exception report and start. That will be a good starting point for you all. Again, these are the certain points we have already discussed. These are all, the balance sheet items or areas where we should focus upon. Checking security, classification, provisioning for the loan cases, investment, physical verification, reconciliation, deposit and interest calculation, compliances. And this is briefly discuss what we, touch base here. We already discussed what is the importance of audit documentation, why this is important, how long you have to retain it. Again, long form audit report. We have to start LFAR along with the audit. We can't park this for the end, because certain item there is no functionality to report in the financial or the MOC or the audit report, but there is a functionality where you can fit those items in the LFAR. Like for fraud risk, internal control, where you may not, or management or the branch manager may not agree to your opinion. That point in time, you may not unnecessarily get into a quarrel, but let's agree to disagree. You report them, you tell them, you provide your response and document it in LFAR. If you believe that this item, particular transaction should be recorded, or the provision should be may be recorded in the financial statement, which you believe it's not happening, you may report in the LFAR. For example, asset liability mismatch. It is a part of LFAR. May not necessarily, you may highlight it, bold it, italic it in the audit report or MOC. Again, this is a crucial document. This is a document which stand you out, or make you different from the group of other auditor. How powerful is your MOC? Whether it attracts the attention of the central statutory auditor or not. So if your observation are strong enough or good enough, if you are getting a call from the central statutory auditor, that means you have really done the good legwork. So focus on your observation. Again, identifying observation is not the job you have. Articulating it, associating this risk with the the prospective impact on the financial statement or misstatement is very important. You just put, okay, there is a mismatch of cash count, may not necessarily address the issue. You have to actually articulate where this could lead or land upon, what would be the potential impact. So a very careful and very important document, MOC. These are the certain examples: misclassification of advances, incorrect interest calculation, under provisioning of NPAs, identify error, mistake, discuss with the branch management, issue the MOC for correction. These are the certain certificates to be issued, other than what is put in your engagement letter or appointment letter. Certain standard certificates are there. Sometimes bank or central statutory auditor may call for subvention or cash certificate, or the other NPA certificates from you. These are the list of certificates or deliverables you have to issue to the bank. There are the certain challenges, that inadequate planning, effective communication with the staff member or the branch manager, use of technology audit tools. So you have to address those issues. How would you address them? If you work on them now, only this is the time you can address them. When you actually start the audit, there is a no time, or there is no the liberty for us to go back and address these issues. Give the training to your staff beforehand. I could see a lot of firms invite us for a 1 hour session or 2 hour session for their even the small team of 10 members or 5 members. Have your internal trainings for your team members. Invite the other members or other the partner in the firm for your team members training. Or if the other firms are arranging training for their team members, see if you could collaborate with them and have the joint training for your members. Conclusion and the best practices. Proper planning and the risk assessment, as we rightly discussed. Your starting point should be a risk assessment. Followed by the testing approach, the assertions, and the controls. Effective communication with the bank official. This is again very important. If you don't agree, or branch manager or the management does not agree with your opinion, then it may not necessarily help you. And the strong documentation and the evidence collection. So this is it from my side. Thank you so much for your wonderful participation. Give a big round of applause.